we got another bout of Trump speak last night, and I think this is one of the lessons that the market's trying to relearn, or at least language that the market's trying to relearn right now, which is whether or not to take Donald Trump seriously or literally. This was a marked problem during the, I would say, first 2/3 of his first term. Volatility was really a defining feature of the markets, where he would tweet something out and ultimately you'd see a short-term swing if it was in a macro sense or even a micro sense for an individual stock. In May 2019, when he announced the tariff increase from 10 to 25% on the $200 billion worth of Chinese goods, the S&P fell 2% the next day and the VIX spiked to 21. But when he tweeted a few weeks later that the negotiations were going well, volatility immediately collapsed and markets went right back up. During 2018, we had many tweets about the border funding. We had 5 different days collectively producing a 9% loss for the S&P 500 towards the end of the month. It was the worst December since 1931. But then again, in the second half of the month, he comes out with the plunge protection team, with Powell and with Mnuchin, talking about how markets are still fine, and we have that rip-roaring rally into the end of the year. So this is really the issue, right? Do we take him seriously, or are we thinking that this is just a negotiating tactic moving forward? By the merit of how the markets have performed here today, at least on the equity side, this seems to be blusters to a certain extent. That while volatility may be coming around as a result of some of these actions, it's really going to be contingent upon the asset class. If this was something that we truly cared about, the VIX wouldn't be down to 14.27 right now. The S&P wouldn't be up by nearly 0.25%, and the NASDAQ up by 0.5% on the day. But on the other hand, you have to price in some sort of risk, and bond yields are higher across the curve. So guys, maybe this is different for me than you, and perhaps we can turn this on our heads and you guys can explain to me as we close out this holiday week, what should traders do, particularly newer traders do, when they're faced with the decision of interpreting Trump's tweets and how they impact individual shares to things like Amazon or, say, Nordstrom, to a macro level like bonds or equities? Do you take the guy at face value, or do you fade everything?
No. So there's a couple things to talk about here. First of all, Trump hasn't changed his story one bit during, his whole tariff story has remained pretty consistent the entire time. So any talk yesterday or, news about tariffs, he really hasn't changed his story. So it's not something new. So at this point, everything that he's talking about is really priced in the market. That's why the market's up today, because he's not telling you anything new. He's just reiterating.
He is who he said he was.
He is who we thought he was.
Right.
And, he is what he says he is. So this is very typical. And so I think that's why the market's at record highs the last 2 days, is because I don't think this is actually anything new. The other thing you have to realize about 2017 to 2019, where you're talking about for reference, is that in 2017, we didn't have a 1% move all year. So Trump was elected in 2016, and the markets, volatility we rallied, and the market volatility contracted the whole year. In 2017, volatility went to new lows, basically. And we didn't have a 1% move the entire year. So the moves that happened at the end of 2018 and 2019 were really, I think, more of a reflection of volatility normalizing, the market just looking for a reason for volatility to normalize, than it was really a reaction to Trump's, tariff news. It would have done that on anything that was a change to whatever was happening the year before, because you can't, volatility is mean reverting, and you can't keep volatility at historic lows for very long. So you're going to get a spike in volatility on any kind of a news event, any kind of a news event, and that just happened to be the one that spiked it. So I don't, will we see higher volatility under Trump than we've seen in the past because of some of his policies? And I'm going to say probably not, for that reason. And the reason I say that is because he has been very outspoken about what he's going to do. So I don't think that there's a lot of surprises. And I think that that's already built in. Like, I think his whole tariff speak is already built into the markets. I mean, I think what would be surprising is if he didn't do what he said he was going to do. So the risk of Trump is always, and it's the risk of basically any president, but it's always the unknown, not the known. So I understand that media and everybody else, wants to talk about the impact of tariffs and all this kind of stuff, but there's nothing that he said yesterday, and there's nothing that, even if he puts these things into place, that's not already priced into the market. Or if it's not, that would be the first time ever. So I don't think that that's the risk of Trump. The risk of Trump is that he does something that he hasn't said, or that something happens because of, things that he does, but not where he is today.
I'm going to go a little bit of a different direction. I mean, for me, if you remember the first presidency, we had a lot of overnight movement in the market because his tweets were all done in the middle of the night. And then all of a sudden, China became a play because, it was a lot about China at that time. I think you're going to see a little bit more of that. I think you're going to see volatility expanding.
Yeah.
I think you're going to see.
But the difference is,
I think you're going to see a lot of nighttime move in the market, which we don't have right now. And it's the reason why we started doing the Sunday show, plus COVID.
In 2016, the whole idea of a president tweeting
was unheard of.
Right.
100%.
And the way that the Oval Office disseminated information was very traditional.
Not through those channels at all.
Right.
I agree with
and
you.
So what he did was he changed the way that he changed basically the entire process for just pushing information. He bypassed everything and just went straight to the street in his own way, which was unheard of. That was a shakeup to the markets. Do you think that would have the same impact in 2024? I do not. I think that we've become so almost immune or accustomed to that I do not think that changes.
You had a 40-point handle move in the E-mini S&Ps last night. We were up 20-something, and then he tweeted out or X'd out or whatever we call it now, and the market sold off by about 40 handles. So, I mean, ain't nothing.
I just...
it's only one entity.
Can I get some...
Sorry, it's only one.
Can I give some color to Tony's point?
Yeah, sure.
Few years ago during the pandemic, a guy by the name of Corey Hoffstein, who's the CIO at Newfin Research, he put out a study showing what the market did during the first Trump term, and this was through December 31st, 2020. If you were to ignore March 2020, the only month over those 4 years, the overnight returns of the S&P 500 from December 31st, 2017 to December 31st, 2020 would have been 22.9% annualized with a Sharpe ratio of 2.1. Intraday returns, if you only traded during the North American trading hours from December 31st, 2017 to December 31st, 2020, those returns would have produced a 4.6% annualized loss with a Sharpe ratio of negative 0.34. Tony, I think that's really the point that people need to be focusing on, that if there is the risk in the market, it's not because he's going to say something that's shocking. Tom, to your point, we've known about the tariffs. The guy's been referencing William Jennings Bryan on the campaign trail for the past 2 years, the tariff man of the late 1800s. But if there is going to be something happening through these social media channels, odds are that it's probably going to be happening overnight, which introduces a new level of risk for traders, where if you're trading 0 DTEs or 1 DTEs, you may actually see the bulk of your position change while you're asleep. And that sets up a completely different type of risk management style moving forward if you're someone who operates on very short-term timeframes. So the overnight hours, Tony, I think that's really where people should be focused. That seemed to produce the biggest movement during the days of Trump's presidency, or rather during the nights of Trump's presidency.
Okay. I mean, nobody knows. It's a decent argument. History repeats itself. To your point, I love the way you look at things sometimes. I mean, I really do. I mean, when you look at things through your eyes and you say, you know what, it was an unknown in 2016 and now it's not an unknown anymore, you're probably right. The moves will be less impactful to the market, but I think they're still going to have some. I think there's going to be some opportunity, which just means for me, I have to be a little bit more careful with my overnight position, make sure I'm all buttoned up for overnight, and look at it that way. So that's how I'm approaching it.